Let's say hello to Mark Newton. He's one of my favorite go-to guests. I love talking with CMT officials, technical analysts. What is top of mind for you? First of all, welcome back to the show.
Great to be here, JD. Happy holidays to you.
I want to get your sense on momentum and breadth today. Moderate buying participation across the tape. More than 230 NYSE listed names reaching fresh 52-week highs. What are you seeing in terms of breadth and broader participation, not just the tech stocks?
Yeah, look, the most important thing is that just today we saw the Dow Jones close at a new all-time high, which hadn't happened in some time. So we saw the mid-cap 400 index also close at new highs. So this week we've seen small caps, IWM, we've seen eco-weighted S&P, now we're seeing MDY for mid-caps and also the Dow. So despite the fact that, look, we have stocks like Nvidia and Meta, which haven't gone anywhere in the last few months, that doesn't matter to the market. We're seeing a broad-based recovery, which is actually quite constructive towards thinking that the market can push back up to new all-time highs with regards to the S&P and the Qs. I mean, look, it's obviously a little bit healthier now than what we saw a few weeks ago, despite the fact that Nvidia has underperformed. That's not a big deal in the near term. The fact that we're getting stronger, breadth is improving, momentum is improving, that's actually a very good sign technically for the stock market after this dovish cut that we saw yesterday out of the Fed.
Can I get your take on defensives? Because I've been doing the show every day down here since August, and what I've noticed some of the defensive trades happen as tech and discretionary start to sell off.
Right.
And in its place at the top of the leaderboard, you get sectors like utilities, a lot of healthcare outperformance as of late, not so much the tail of the tape the last few days, but what do you see in terms of strength or weakness for defensive trades?
This is actually a pretty important tell for investors that in the last 2 weeks we've seen exactly the opposite. We've seen healthcare, utilities, and also, the REITs have all pulled back to really multi-day lows, and there's been no sign of strength out of consumer staples. That was the one thing where if you're going to be bearish, you need to see staples work. That really hasn't been happening. So if anything, look, this is a risk-on market right now. We're seeing the defensives weaken. We're seeing financials, industrials push back to new all-time highs. RSPN, which is the ETF for the eco-weighted industrials, is back at new all-time highs today. That's great. We're seeing these transport stocks really kick into gear. It's not only the airlines, but a lot of the different rail freight stocks are showing extraordinary strength. That's a good sign because these have been lagging for years. So if anything, look, the Dow theorists always we want to see the transportation index move up and join what's happening in the Dow Jones Industrials. That's now starting to happen. So, we won't talk about next year, but in general, this is a very good sign heading into the last few weeks of the year.
This is why we love talking with CMT professionals, because he's going to give us some old school Dow theory. What's going on with the transports? What's up with the industrials? Now it's a party. Give me your take on the small cap breakout, how sustainable this is. When we have these days of outperformance, it's usually the Russell leading that action. Today up 1.2%, another all-time high. What do you find?
My view is this is all about the dovish cut that we saw yesterday. So, Powell had a chance to be hawkish. Instead, he's not sure about future. In general, it was seen as a sign of being, Treasuries rallied for the last couple days. Now we're seeing small caps move right back to new all-time highs. So that's generally a pretty constructive sign for small caps. In general, small caps tend to outperform when the Fed's cutting rates. We have these high debt to capitalization companies. They benefit when interest rates come down. So we expect 2 more cuts in the next year. That's going to be good for small caps. In general, another thing, small caps are outperforming the SPY. So we're seeing a lot of these laggard high cap technology stocks. Small caps have been doing better than actually Mag 7 in the last few days. That's something for investors to note heading into next year.
Mark Newton is the head of technical strategy at Fundstrat. Every time I talk to you, I learn so much. You make me such a smarter host to do stuff, and I know we have a lot of smarter investors.
2 smart guys. Look, it's all about
It's great to have you. Mark, thanks for kicking us off. If I don't see you, enjoy the rest of your holidays. We'll do it again soon.
Thank you, sir.